In this video, I'd like to take a few minutes and respond to your comments before we dive in. If you're new to investing or want to get better at investing, you're in the right place. Here at Tykr, we're all about clear, confident investing. Now, there are a lot of people out there losing money in the stock market while others are making millions. And there are two reasons why people are losing money in the stock market. Number one, they're not using the right tool. Number two, they're letting emotions take over. Fortunately, there's a tool that helps solve both of those problems, and that tool is Tykr. And if you are interested, you can join Tykr for free. Right, going ahead and looking at my screen, the first comment is from Bang Media 1. Thanks, valuable input on non-sexy value stocks that are often overlooked. Another example of an overlooked stock that, according to analysts, is over 500% undervalued is CHRS. All right, we're gonna use Tykr for this. Unfortunately, Tykr saves us a ton of time. To really understand if a stock is really a good or bad investment, there's really 7 things to pay attention to, and we're gonna go through those right now. So logging into Tykr, here we go. CHRS, this is CHRS Biosciences. Right off the bat, this is giving us a warning. This is a penny stock. You can see here the share price is $1.05 as of today. For context, 99.9% of stocks that reach $5 or less, that's US dollars, never break out past $5. The reason is institutions lose confidence and they lose interest and they move on to larger stocks. Now, if a stock is between $5 and $10, there's a 90% chance it will never break out. So right off the bat, we know this is a no-go. If anybody says this is undervalued, those are analysts with no business experience. And there are a lot of analysts out there that probably shouldn't be analysts. So we'll keep going and hit those 7 points. So there are 3 things I like to look at right away: the summary, the score, and the margin of safety. So in this case, the stock is watch. Stocks in Tykr are either on sale, watch, or overpriced. And only about 15% of stocks actually make it to on sale. So this is in the middle category. The score is a 56 out of 100. If you can get above 50, that's actually pretty good. In this case, not too bad. And then we have the margin of safety over here, which is at 18%. Ideally, we want to see that over 50%. So this is not too bad right away, aside from that penny stock rating. I still wouldn't touch the stock with a 10-foot pole because of the penny stock rating, but I'll keep going. So with those 3 criteria, things are looking okay. In the center, you have the 4M score. In this case, nobody has actually done a 4M yet. If you guys don't know, you can click this, boost confidence, and it will walk you through a 4M score. It takes about 60 seconds. You actually will see OpenAI do a lot of heavy lifting for you right on the screen. We're gonna skip that. I'm just gonna keep going here. All right, so those are 4 things to look at. That's summary, score, margin of safety, and 4M. Let's keep going. Down below, we're looking at those 5-year returns. I like to set my charts to 5 years. You can set it to anything you want, but I like to compare against the S&P 500. I'm always thinking about the S&P 500 typically returns about 80% over 5 years, sometimes a little higher, sometimes a little lower. But anyway, I'm looking here over 5 years. This doesn't give me any confidence. Negative 94%. Not good. All right, let's keep going here. 2 more points to pay attention to. If you're interested, you can actually go to Tykr.com. I'll actually go there now. And you can go to the education tab and then down to calculations. Our calculations are open source. You can actually see the math that powers the summary, score, and the margin of safety. We like to give our customers transparency. One of the lines that we pay attention to, and this is the number 1 most important line to pay attention to, which is EPS. EPS is essentially profits. EPS is earnings per share. It's net income divided by outstanding shares. You can summarize it as profits of the company. Again, number 1 most important line. So what I will do from time to time is I'll go here, go to financials, and then I'll toggle this to quarterly. And then on income statements, I will go down to earnings per share. Check this out. So we can see this stock has not been profitable. They did become profitable, looks like in March of 24, but right back to negative. That does not give me confidence. I may pay attention to this stock over the long haul, but the fact that it's a penny stock, immediate disqualification. Anyway, let's keep going. 1 more line to look at. This would be your earnings calendar. When you have a stock that continuously beats those earnings estimates, that gives institutions confidence to buy more. We'll check this out. Well, you go down, we're seeing a lot of red here. The most recent quarter was pretty good at 33, but prior to that, look at this, a miss by 540%, missed by 195%, and missed by 28%. Not a good sign. You want to see stocks that are consistently beating those earnings reports quarter over quarter. So going back here, whoever said this is 500% undervalued, again, not a lot of experience. Moving on. The next comment here is from Sachin Shelke 1526. Thank you, sir. Please try to cover stocks from country exchanges like India. Right, I can speak to that. So there are a lot of investors out there that are like, I want to invest in the Apple in my country or the Microsoft in my country. Well, those stocks may be headquartered in the US or actually global stocks. We as investors, we want to invest globally, not locally. If you only invest in stocks in your country, it's like investing in small businesses. That's fine, but keep in mind, you have limited scalability with revenue, which means you have limited scalability with profits. I see this way too often that people only want to invest in stocks from their own country. You are limiting yourself to make money in the stock market. You want to find global stocks that have offices, locations, manufacturing plants, distribution centers in multiple places around the world because they can scale that revenue much faster. And if they're run by good leaders, they can optimize their profits. Everything comes down to profits, and if profits increase, that means the share price will most likely increase. So, Sachin, I do have to tell you, you can invest in stocks in India, but I would think bigger. Invest in global stocks. All right, this is a fun one. This is from Villar, and it says, the idea behind Tykr is a very good one, but there are a lot of mistakes that I hope you will fill in the future. I've gone through the software suspiciously and found many stocks that are marked as on sale in the past, yet have been falling for years. My thought is you can't 100% trust these calculations. Well, we do not look at share prices. We don't calculate where share prices are. We look at the fundamentals of business. So let's go into Tykr. What we're looking at is what Warren Buffett looks at. One of my favorite quotes from him is something along the lines of, I will invest in a stock today. I will not look at the share price or the charts for the next 10 years. He does not care about the charts. What we care about and what we analyze are the financial statements. Those lines include revenue, net income, EPS, cash flow, balance sheet. You have assets, liabilities, debt, and equity. Those are the key 8 lines. When you go to the chart here, we will calculate when stocks are on sale, watch, or overpriced, and then put scores on it and the margin of safety. Regarding the share price, which is this chart here, we cannot predict where that's going. The reason is there's events that nobody can predict, like COVID, or if there's a conflict, or if a CEO says something stupid on X. The list goes on. There are a lot of things we cannot control. So keep that in mind. We look at the fundamentals. We do not look at the share price. So there are some people that'll look at the charts and be like, well, you said it was on sale here, but it went down. Well, look at things outside of the fundamentals. In some cases, it could be some kind of legal issue, or like we saw in 2022, that was pretty much a recession, high inflation, share prices started going down. You go back even further to February and March of 2020, that was COVID. We could not predict that. Share price went down about 30%. And if you ever do question Tykr, we added a new feature called Proven Results. We'll go there now. You can actually see here in this example, on sale stocks, 4M score of 70, large cap, looking at the S&P 500, in this case, 93% over 5 years. Typically it's 80%. In this case, we're seeing 93 because the market's performing a little better. This bundle of stocks here, 186, doubling the market. So again, we do not care about the share prices. We care about the fundamentals of businesses. Next up, we've got a comment from J. Warren Philly. Elon equals dumpster fire. Yeah, there are times he says some stupid stuff which can impact the share price. I do respect what he's done, especially with PayPal, his earlier years, and he's done good work with Tesla. They do make good products, but I do warn investors out there that invest in Tesla, be very careful. The competition is really heating up. There's a lot of big players around the globe. VW has taken a lot of market share in Europe. You've got, out of the top 10 selling EVs in the world in 2024, BYD out of China has 5 spots. It's ridiculous. Another thing to keep in mind is Toyota's the market leader so far about the new solid state batteries that will be coming out. We're talking 1,000-mile range. It'll be close to that. Not quite 1,000 right away, but that's still a ridiculous long mileage. And get this, a charge time of about 10 minutes. Tesla has said they're not going to go solid state. I don't know if that's a good idea. Again, things to pay attention to if you are a Tesla investor. I'll stop there. We'll keep going. We've got another one from Abdullah Khan CI4UC. I've been watching you a lot. You deserve way more subscribers. I appreciate that. Thank you. Can you do a video on ALTM, Arcadium Lithium? All right, let's do it. So we'll go to ALTM and have a look. TM. Uh-oh. Same situation as the last stock. You can see penny stock warning. This is at $2.88. Too risky right off the bat, but let's keep going. So this stock is overpriced. Score of 33, not looking good, and margin of safety of 1%. We can see here some people did some 4M scores. If you see a 59 or lower, that is definitely a sell. In Tykr, if you guys don't know, it's 80 or higher on the 4M as a buy. And then 59 or lower is a sell. I've done a lot of testing around those metrics. Those are the numbers to look for. So right away, I wouldn't even move forward. Let's keep going here. I want to look at the other tabs, going to financials. I'll go to EPS. Yeah, look at this. The quarters is just, when you're running a business and you have a board of directors and you have to go to those board meetings and show them a chart like this, I would be very fearful I'm losing my job that same day. Like when I see numbers like I'm done. When I've worked for corporations, I've seen leaders throw around terms such as RGE. I've been in meetings where guys have said, so many people don't know how close they are to an RGE. An RGE is a resume generating event. I would be facing an RGE if I was in the C-suite or even the CEO of this company. I'd be very fearful. Let's keep going here. We'll go to the earnings calendar. And again, you want to see them beating those estimates. We do see here a tie. They did beat in, looks like May of 24. They had a miss, a tie. Okay, so not great. I've seen worse on earnings calendars, but still everything really rolls up to that penny stock. I won't touch the stock with a 10-foot pole. All right, those are all the comments I have today. I'd love to hear what you have to say. If you like this format, I kind of want to do more of it. If you have any questions, comments, you can leave them down below. If you want me to take a look at other stocks, please do the same. And I'll try to do another one coming up in the near future. And if you're interested in buying and selling stocks on your own with confidence, you can join Tykr for free. Thanks for checking out this video. We'll see you in the next one. Bye for now.